Hi, I'm Andrew Berman from the Mortgage News Network, coming to you from the M&N studios here in New York. Today we're going to hear a story from William J. Tessar, who's President and CEO of Civic Financial Services, about their new correspondent program. But before we get into that, we gotta ask him some questions. So Bill has joined us. He's been with Civic Financial since 2017. He left a successful job, running a successful mortgage bank, Skyline Financial, to join actually Civic Financial Services, which on the surface you might think he's crazy, but I'll let Bill tell his story here. Bill, thank you so much for joining us.
You're welcome. Nice to be here.
So listen, and I got to say, from looking at the jump to go from Skyline Financial Services, to Civic, before we all know the Civic that it is today, people must have said you were crazy. What led you to do this? Because you've timed the market many times, perfectly. So what was that crystal ball that you had that you saw with that huge opportunity with Civic Financial Services?
So, I didn't really think about it in terms of a crystal ball. Here's kind of how I look at it. When you're not looking for opportunity, normally that's when it finds you. And I was super happy with my position at Skyline, loved the people. We had a tremendous amount of momentum, and we thought we had built something special over the last 10 years there. And actually, we were a force to reckon with on the conventional side. I think the aha moment for me was part of a process that I participated in with the owners of Wedgwood to help them find somebody to run Civic. They had built this thing from scratch in 2014, just through an idea. They didn't have any mortgage knowledge or guidance, and from 0 to 20 million a month, which honestly doesn't sound like a big number when you think about the big conventional numbers that are being done, but it's incredible when you think about how they started and where they came from. And so at 20, the owners said, we want to now scale this and we want to become a player. And in order to do that, we need somebody that has done it before. And so we started a process where I tried to help find them the equivalent of a CEO or a president that could do that, and teed up a handful of people, and none of which worked out in terms of going through that interview process. And in 2016, through that process, they had made an offer to me. I had, as respectfully as you could do, declined that offer. I was not looking for a new job. Yeah. I loved Skyline and loved where we were going. They were extremely persistent. And through that persistence, I then gave them a doc request, which included, everything you can think of under the sun about the company, financials and correspondent agreements and employment agreements and warehouse lines and balance sheet and tax returns, all that stuff. And so they produced that very, very quick to me. I took a 3-day weekend and went through it and literally had the aha moment, which kind of knocked me off my chair. And so what that was this. They were doing 1/17 our volume, our being Skyline, and they were making 15 times the profit. And it just didn't compute to me. But as you know, the conventional side of the world, it's you have to be an expert and perfect and get better every day. Yeah, You're dealing with extremely thin margins, the most competitive industry on the face of the earth. The government's your partner. And, if you hiccup the wrong way, you could blow a quarter. And so I lived in that world for 30 years. I know how to operate there, and I'm comfortable in that space. But you look at the other side of the aisle where they have real margins. Competition is negligible in terms of the comparison. These are business purpose loans, so the government's not your partner. And I remember just sitting on the chair going, oh my God, this is it just didn't seem real to me.
That's phenomenal. That's just great. I mean, it's a great story. I mean, to know actually, so 2007, I think, is when you started at Skyline, with partners like Bill Dallas. I mean, which is a household name in the mortgage business. So you had 10 years building that up. So that opportunity, that weekend, would have loved to actually to see that eureka moment that happened, in your home office. But it's a phenomenal story. It really, really is a phenomenal story. So I mean, obviously, you saw this like groundswell of demand generating in terms of bridge loans. I mean, so talk to us. Like, what did you see happening then? That still happens then. That obviously brought us to where we're talking today. But now you're offering the bridge loans on a correspondent basis.
Yeah. So look, if you think about conventional size of the business, they're a $1.5 to $2 trillion a year business in mortgage banking. And if you go back to the best of the best, I think it was like 3.5. But let's just call it 1.5 to 2 trillion. The bridge space is about 50 billion a year, right? And so my thought was, I felt comfortable that just looking around at who the market leaders were, that to obtain a 5% market share was real. And in some businesses that might sound absurd, but to me, if it's 50, could we do 2.5 billion? I thought that there'd be like little to no problem if we mapped this thing out properly and had shared the disciplines of what we've learned on the conventional side. Because you think about what we said a few moments ago, you have to be perfect to make money on the conventional side. But if you apply that same discipline to a side of the aisle that you have a little bit of wiggle room, you'll hit it out of the park. And so that's basically what we did when we joined in early 17. I brought with me the head of operations who I'd worked with for 12 years. And we were really in alignment. What's important, I believe, on the sales side is that you don't have this tug and pull thing that happens with operations, but that you're all rowing in the same direction. And with Merced Cohen, we have that. And so we are in alignment in terms of how hard it is to go out there as a salesperson, get a loan, bring it back, make it qualify and close in a timely fashion. And if you're not in alignment, then you got the recipe for disaster. So bringing her over, we literally deconstructed everything that Civic had done because they did it grassroots without any mortgage knowledge. We stripped down Encompass and got rid of like 45 or 50 of the 90 steps, which were unnecessary in our space. We started creating a digital platform, a social media push, reputation management, and the normal branding that would happen with a company. We went out and hired the best of the best in the space so that as we were pushing these loans through the process, we did it with our credit partners' best interests in mind and not just production. And we went from 20 million, I think 2017, we ended up funding just under 600 million. And then last year we funded 60 million shy of $1 billion. Only I think 2 or 3 companies have ever done $1 billion in a year on the private money side. And we should do $1.5 billion this year.
Oh my goodness, that's great. That's great. And you're still actually in. I don't know if you've ever read the Blue Ocean Strategy, but you're in the Blue Ocean. You left that red ocean. Do you think from a mortgage banker, the correspondent lending partners that you're working with, do you see that same blue ocean opportunity existing for them to generate the business?
Yeah, I think it could be the biggest opportunity we have at Civic. And here's why. When I was the president at Skyline, we almost forbid anybody from coming into our office that had private money offerings, mainly because it was a broker relationship. And our company couldn't survive on broker relationships, meaning you only made the money that you charged the borrower on the front end. You had no back end revenue. And so if you're on even a 60% split or 60 or 70, the company's making 30, 40% of a point or 2 points. You cannot run a company that way. You need the banking revenue. And so my thought was, how do you purchase business cut significantly. Refis were cut 60%. And other than the short drop we've had in rates, companies were teetering and on the verge of either being acquired or going out of business. You know that, right? So my thought is how do we bring a product that nobody has ever thought about in terms of the way they view Fannie, Freddie, or Ginnie products, and bring it to them in a way that allows them to make some back-end revenue and could be part of the suite of offerings their sales force brings to the community. And our thought was, Correspondent. What has taken us so long, took us a year longer to come to market than we thought, is we did it different than the old table funding. It wasn't just put docs in their name and we do everything. We've actually set up the vehicle so they have warehouse financing connected to this product. And that took us a much longer period of time to do properly.
That's fantastic. So it's set up properly. So now obviously, from the investor side, as far as institutions pouring money into this, you must be doing well. I mean, so talk to us about the investor demand, to put money into this from institutions. Where is this money coming from? How is the appetite today?
So look, here's what I would say. I know what it's like to not be the good-looking person at the dance, because I was on the conventional side for 3 decades, and you are begging for partnerships in Wall Street. You're begging for them to consider doing business with you. For the first time, I'm the hot chick at the dance, and I like it. I want it to last forever. But the reality is, it's all connected to margin. There's real spread in this trade, and most of that spread is gone on the conventional side, and so they have to just do billions and billions of dollars to make any kind of money. What has made this trade interesting is that not only is there real margin in it, but nobody understood how they would perform. So one of the big things we did last year is we had 2 securitizations, and we did those not because we made more money, but we wanted to provide some transparency and visibility into the trade, so that when you go back and you speak to these investors on Wall Street, they could point to that securitization and see the timelines and the default percentages and all that other stuff that, quite frankly, has been a mystery for many, and it's actually worked out in our favor.
Wow, that's interesting. So you're going to markets not just for money, but to kind of prove the concept and just showcase what you guys are doing and how well it's working.
I think it helps everyone in our space. And, I said earlier, I don't think we have a lot of competition. We have competition. There's other big companies out there that are doing a great job. When I say there's not a lot of it, you don't have 80 companies doing over $4 billion a year, highly capitalized, that are all fighting for the same Jones loan. That's really what I meant by that. But yes, I think it helps all of us, right? And that's how we want it.
Fantastic. All right, Bill, great story. I mean, listen, if someone's not doing business with you already, I mean, this new correspondent program, has just recently launched. How do they get a hold of you guys?
Yeah, so obviously our website, right, civicfinancialservices.com. They could also reach out to Zena Zante, and we'll provide you her contact information for that as well.
Fantastic. Awesome. All right.
Excuse me, I said civicfs.com, pal. I think I said financial services.
I
spend more time on my website.
Fantastic. All right, Bill, again, thank you so much for taking the time out of the day to meet with us. An unbelievable story, from you personally, leaving actually Skyline, to the story of Civic Financial Services is a really cool thing. We're glad to be working with you guys.